Hello traders, it's Monday, August of 21st, and this is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the major market movements. So the first instruments we are referring to the dollar index, which measure the greenback strength against a trade weight basket of 6 major currencies. So it was down 0.3% at 93.96 on late Friday as the US political uncertainty and growing doubts over the prospect for another rate hike by the Fed of this year was weighed. So the ongoing uncertainty over the economic agenda of the US President Donald Trump and doubts that the Fed will deliver a third rate hike this year have fed into the recent dollar weakness. The US dollars was surged to 14-year highs after the Trump election on hopes that his plans for fiscal stimulus and tax reform would bolster the economy. So the dollar has since given up its post-election gains amid the mounting concerns about the administration's ability to deliver on this agenda. So the lower rates typically weigh on the dollars by making US assets less attractive to yield-seeking investors. Well, the euro was higher against the US dollars, with the pair EUR-USD rising 0.32% to 1.1760. So the euro posted its third consecutive weekly gain against the pounds and rising 0.56% amid growing expectations that the Bank of England will keep interest rates on hold in the coming months amid the concerns over the economic fallout from the Brexit. Having attacked in commodities markets, the gold price was retreated on Friday after surging to their highest level in 9 months earlier and settled down 0.16% at $1,290.27 a troy ounce. It is on the back of concerns over the US political uncertainty and amid the safe haven buying in the wake of terrorist attack in Spain. The precious metal reverts course after reports that senior White House advisor Stephen Bannon was leaving his post in what was seen as a positive for the Trump administration's agenda. So the ongoing uncertainty over the economic agenda of US President Donald Trump and doubts that the Fed Reserve will deliver a third rate hike this year have been factors underpinning the gold demand. So gold price has risen around 11% this year, due in large part to the weaker dollars, and the dollar surged to 14-year high to Trump's November elections on hope that his plans for fiscal stimulus and tax reform would bolster the economy, and the dollar has since given up its post-election gains amid the mounting concerns about the administration's ability to deliver on this agenda. A weaker US currency makes the dollar's denominated metal cheaper for foreign buyers, and the gold price rose above the $1,300 per troy ounce earlier Friday, a key psychological barrier for many investors, after a terrorist attack killed at least 13 people in Barcelona. As for the oil, it was settled sharply higher on Friday, with the US West Texas Intermediate crude price surged $1.42 or around 3% to end at $48.51 a barrel amid reports of a unit shutdown at one of the largest oil refineries in the US, as well as the data showing a weekly fall in the number of active domestic oil rigs. So the traders bailed into crude contract after reports surfaced that a unit at Exxon's Mobil's Baytown, Texas refinery shutdown. The 584,000 barrel a day plant is the second largest refinery in the US. The report surfaced ahead of an update from oilfield services firm Baker Hughes Friday morning, showing its weekly count of oil rigs operating in the US fell by 5 rigs to a total of 763. So the weekly recount is an important barometer for the drilling industry and serves as a proxy for oil production and oil services demand. Aside from supply and demand, investors also bought up oil contracts amid a broader market rally sparked by Steve Bannon's departure from the White House. In this week, investors will be looking ahead to speech by central bankers at the Fed Reserve Annual Central Bank Symposiums in Jackson Hole, real make. And investors will also be watching US data on housing and durable goods to gauge how it will impact on the Federal Reserve policies, while the Eurozone is to release data on the private sector activity. On the other hand, oil traders will eye fresh weekly information on US stockpiles of crude and refined product on Tuesday and Wednesday to gauge the strength of demand in the world's largest oil consumer. Meanwhile, traders will also continue to pay close attention to comments from the global oil producers for evidence that they are complying with their agreement to reduce output this year. And now we're going to review the highlighted economic data and events that released on the Fridays, right? So on Fridays, Canada has released its core consumer price index for July, and it was at negative 0.1%, so which is disappointing result. And the United States was released the Michigan consumer sentiments for August, and it was at 97.6, which is better than the expectations. And also the bigger huge in the United States was released the oil rig count, the weekly rig count in the United States, and it was at 763, which is 5 more decrease 5 rig in the last week. So as for today, as usual, it is a quiet trade Monday, so there is no highlighted economic data and events for today. So now we're gonna take a look for the technical analysis, and the first instruments we are referring to the GBP/USD pair in 4-hourly chart. So the pair is remain traded in a downtrend, and the price was ranging between 1.28500 and 1.29000. So this indicated the losing downward momentums, and both moving average line is remain expanding downwards, so a price closure that's below 1.28300 signal to continue its downtrend and fall further towards the next support level at 1.27400. But however, referring to the MACD indicator, the both movement lines were pointing upward, and the momentum seen above the zero levels suggests to move slightly higher in short terms. So a price closure above 1.29400 suggests to experience a short-term retracement, and the next resistance level we could refer to 1.2900. While the euro, it is remain traded in an uptrend against the US dollars, and it remained ranging between 1.17000 and 1.17700. The both moving average lines was moving flat, additional with the ranging signal showing the MACD indicator with the both movement line mostly flat and momentum were weak. So this considers for the pair to remain ranging between the range and the price closure that's above 1.17900 signal to continue its uptrend and move higher towards the next resistance level at 1.19000. Otherwise, closure that's below 1.16600 suggests to experience a short-term retracement and fall towards the next support level at 1.16100. It remained traded in a downtrend against the US dollars, and the price was closed above the resistance level of 0.73000. So this taken as a signal to for it to experience a short-term retracement, show a price closure that's above 0.73500 suggests to retrace more and move further higher towards the next resistance level at 0.73800. For the OZ, it is remain traded uptrend against the US dollars, and it was rebound from the support level of 0.78800. So it is taken as a signal to continue its uptrend, and a price closure that's above 0.79500 suggests to move further higher along with the uptrend and refers to the next resistance level at 0.80600. While Japanese yen, it is traded in a downtrend against the US dollars, and it failed to close below the support level of 108.800 again. So a price closure that's above 110.100 consider as a signal for a formation of double bottom patterns and suggest to experience a short-term retracement. Otherwise, closure below 108.500 is taken as a signal to continue its downtrend and fall further towards the next support level at 108.20. As for commodities markets, it is remain traded in uptrend for the gold price. Okay, so it was retraded after it hit the resistance level of $1,300 a troy ounce. But however, it is still in an uptrend. Closure above $1,300 signals to continue its uptrend and move further higher towards the next resistance level at $1,307. Otherwise, closure below $1,278 suggests to experience a short-term retracement and fall further towards the next support level at $1,264. And for the oil price, it is remained traded in an uptrend, and it was since rebound from and closed above the resistance level of $48.40. So it is taken as a signal to continue its uptrend and move further higher towards the next resistance level at $50.40 a barrel. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.